What's up? I'll turn the music down in a minute. Alright. Hopefully the music is at a good level. I'm gonna just leave it there. Let me know in the comments if it's too loud. It might not even be audible anymore, to be honest. So, where are we at? Basically, we just came and tagged 64k just now. The local low, or the most recent low to go beat is 60,000, of course. We were stuck up in this consolidation for a few days, well, many days actually. And we're trying to figure out what side it was going to break. And look at that, I mean, the overall trend direction, as we know, is down. So a break to the downside was, I guess, of higher probability. When you've got a trend direction, the odds are on the side or on the favor of the trend, the overall trend. So keep that in mind. I suppose reversals can happen, but you know, after like the velocity we had to the downside, like look how steep that is. Keep that in mind. Got that. And if I just unlock this, there was this shape that I was tracking back, fix it up. It was like, yeah, locked here and here. And then this one was more so like roughly like that. So it's really putting the lows to the test here. I would say any structure that was set like here, you know what, I'm just gonna change this back. There we go. Has been broken, like, you know, low side broken. And yeah, so that's a market structure shift. Some people call it a change of character. It's a market structure shift is the same thing. A change of character, a chotch, or a COCH. I don't know, something like that. But a market structure shift is how I've seen it expressed in other other YouTube channels when they talk about, you know, structures broken. Because at that time we had a low, a higher low, and then a higher low. So things were looking, oh, there might be something. We could have potentially popped out. You know, if the demand showed up, we could have done that, and that would have been, you know, the structure would have maintained higher lows. And but you know what, the last high before this low here was never challenged. So this high here, this little, you know, whatever you would, even if you would class that as a high, I don't know, but once that got set in, you just never approached it. It never got put under threat. That was basically the 80k high. you know, you had a like somewhat of a double top here, swing fail, double top, a low, lower high, lower high. So we had the classic squeeze going on. There was no new structure breaks, and this is what we've been waiting for, because like when you get stuck in a range where there's no structure broken either side, it gets very boring. The range gets, as the range gets tighter, that's what gives you that triangle effect. No progress to the upside, no progress to the downside, just stagnation. So in the last few hours, it's good to finally get an outcome, and that was set at least by this first boundary being broken to the downside. So these, basically in 2 hours, it's sort of like put the writing on the wall of the overall outcome of this squeeze. But and then it looks like there was some kind of like a violent buyback, but has been unable to push it higher and drive it back up. So that's what we got so far. And this reverse here, totally, it could certainly get back up into the range again, because that might be the swing fail play below the low. But me being bearish, the trend overall being to the downside, pretty strong, right? I suppose it's, you know, it's a downtrend. It's going down further until proven otherwise, until we get structure breaks. You know, locally speaking, this was the best Bitcoin could get after dropping from 80 and down to 60. The best we could get was a push up to 72 and a half. And every new attempt was just weaker and weaker. Like, there's no velocity to the upside. Just no one's really showing up to drive it through resistance. It just keeps getting sold into. So that seems to be the theme. So playing into that method and expecting, you know, downside plays is, you know, you're trading to trend if that's the case. And then, you know, if you find that you're going short and you're expecting downside, the moment that shifts, you'll start, you know, getting stopped out. You'll start seeing higher lows and higher highs. That's when you know the market has shifted, at least for whatever time frame you're looking at. You know, let's say we do it on the 4 hour. Like, we haven't really seen any significant upside since the flag, like since this old flag back here in December. You know, there was some structure changes here, like you got a high, higher high, higher high, low, higher low, equal low, you know, equal high there, and then a new high here. So this was like the last little push of optimism right here, at least on this time frame. And then subsequently, every high since this point here, this push to 98,000, has just been weaker, 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 so on and so forth. Every high that gets put in is just lower and lower, and we cannot get that structure to break back to the upside, at least not yet. And that's only the 4 hour time frame. So that's the context of that. Let me just delete some of this. I'll hide these because I'm going to zoom out further. And we'll look at some higher time frame context as well. I'll turn off my 10K levels just so it's clean. So all we've got here is the all-time high line in pink. Let's go daily chart. And what kind of structures are we? Okay, now this was and I agree with this. There was like this low here was the last line of defense for the bull market to maintain bullish market structure. You could argue that this was, because that was a new low, a new higher low set in, and once that broke, you sort of shifted this time frame. But you know, if you had maybe a weekly chart, yeah, as far as the cycle goes, it seems to be like it was, that was a low, that was the next one, this was the next one, and then it was like, or either that was a higher low and there was optimism, but that failed to push higher, broke structure here, so broke that low, and then also broke this low. So that, you know, you'd have to be zooming out pretty far to suggest that you're still working on higher lows. If you're talking monthly chart, now you're talking like multi-cycular. Is that the word? Multi-cycle. So, you know, on this time frame, the lows, you know, you're talking about these, which, of course, I don't think they're under threat. I think this bear market that we're in pulls up before getting down to 15,000. I don't think we go that deep, but the proof will be in the charts, like when it happens. When the low comes in, it'll be quite obvious. Let me back that music off a little bit again. Alright, so weekly chart, I think it's all pretty clear. I mean, you can see it all through crypto YouTube, crypto Twitter, you know, Discord sentiment. Like, the channels are so quiet, if not dead entirely. Yeah, it's bear market vibes. So let's delete these. Now remember, from like a number of streams ago, I was talking about a, what do you call it, a one-to-one extension of this move down here. So to do that, what's up, Ellis House? How are you, man? If I take that, take it down to the first low, bring it up to the swing high. I was talking about a target of 52,000, which is basically just a one-to-one move off that first drop. A one-to-one, yeah, takes us to 52k. That is very much within reach now. It's only about 10,000, maybe $12,000 away to hit that target, and that is a one-to-one off that first move. So it also sort of coincides with these lows here. So there's like a bit of a cushion there. Now the next thing would be, if we hit that low, is to check whether that's going to hold and support the market from there. Like if it's going to turn from that level, because it very well could break through it. It just depends on what's happening, on like where the demand steps in. Apparently there's a bunch of demand sitting at 60, which is great, that's fine. But let me see. I'm gonna show you my cost averaging journey so far. I haven't really bought through here too much because I feel like I already bought that level recently, so I'm just gonna, let me turn on my levels, I'll show you what I mean. Okay, so my cost average here, 1 and 2 have now shifted down to 3, so I'm going to hide the 1 and 2 because that was where my average position used to be before the subsequent buying. So this is my current position. It's 80,600. I haven't bought since this day here, which was not the best buy. I could have bought lower, but anyway, how many days has it been since my last buy? 18 days, so almost approaching 3 weeks. Approaching 3 weeks ago. So I'm gonna, you know, if this low here gets challenged, I think I'll put a bid in. I'll buy down at 60,000. Not too heavy, maybe of equal weight to what these were. If it does something a bit more dramatic and we lose that level, I'll consider making it twice the size of what these have been. So basically the goal for the rest of this year is to improve this cost average position, get this line to come down as deep as I can get it. So just so you're aware, all of these buys that I've made are all of equal dollar weight. Just equal weight. I haven't sort of made the lower ones heavier, I've just kept it equal. If we test or lose this level, I might double that weight. And then, you know, maybe after the halfway point, or maybe after Q1, which is pretty, you know, back end of March, I'll start doubling again and make it even heavier for these average buys and get that average down as low as possible. Because what I'm working off, I don't care what sentiment is doing. I don't care what ideas are being pushed on Twitter and YouTube and whoever, like whatever expert is supposed to have the correct opinion. I don't care, because these experts come in and they say they can be entirely wrong, you know, so just ignore it. That's the best way to go about it. And your best friend is the chart, in my opinion. I'll show you what I mean. Let's go to just the Bitcoin index chart. I'll jump on the weekly time frame, zoom way out and get the whole thing in. Go logarithmic, and you can see, like, over time Bitcoin shows you the way it behaves. It bull markets, bear markets, it bull markets, it bear markets, bull, bear, bull, bear, bull, bear. What? So I know that every time it bears down, the sentiment always shifts back to that was it. It's never going higher. Like, there's no more upside potential, you know? It happened last time. If you remember, you might have been here in 2022. It got down after FTX collapsed. A lot of people were like, nah, don't even get into it. It's not worth it. It's never coming back up. It's broken. Like, the industry has collapsed. It's got no future. And what happened? We go to $126,000. So over the course of 3 years, of course, it takes time, but you know, it's the same shit every time. Every time they, you know, they run hit pieces in the media, all of the YouTube channels get bearish and pessimistic, and yeah, sentiment sucks. This time is not different. It's gonna, you know, the same psychology plays out every time. Now, to what level it goes down to, I don't know. Like, I have no idea. That's why I'm dollar cost averaging. Basically, the best method to get into the market is dollar cost averaging. If you are honest with yourself that you don't know where the bottom of the market is, then it's the best. It's the best approach. It's the best strategy. Same with the top. Like, if you don't know where the top is in price, just average out of the market. Don't try to pinpoint it and sell on the single day that you think the top's in. Like, it's better to just ease out of the market and then ease back in when you. And then also, I guess, at least with Bitcoin, this is not the same with every asset or altcoin, is that it has given us this thing, which is like the distance between highs and lows and halvings, and it seems to be kind of methodical, or what would be the word? It seems to be running on a schedule. It's so playing into this so-called schedule has, you know, been pretty rewarding so far. Or it's been, you know, it's kind of had the say in the shift in the market direction. Distance from low to low, here to here, same as down here to up here, same as, and now because these distances, let's call this distance 1 and distance 2, which is bear market low to bear market low, and then back here bear market low, which was actually a double bottom, to bear market low here. These distances of 1 and 2 were very similar, if not identical. So all you have to do is go, okay, well, if that's the case, let's take the average between those two distances and push it forward, and we'll get 3, which is, you know, bear market low to bear market low. And it's sometime late September, early October is where the bottom should be in if this pattern or cycle is to repeat. I know I've said this so many times, and it's probably getting boring hearing me say it. I say it like every stream, but you know, until this breaks, why not just go by this? Because I think a lot of people are. Some people fear that it's too obvious, so they're betting against it, which is like, okay, well, that's fine. Like, it might break, but why would you side with something that hasn't happened yet? Like, if it hasn't broken, why would you expect it to? You know, why would you put your money, why would you back something that has never happened before, which is breaking this cycle? So there's more examples of this cycle being followed than broken. So that's my opinion. I'm going to just follow the cycle. I'm going to follow the halving method or the 4-year cycle method until it breaks. Like, you know, if it breaks, well, then that's fine. You got to deal with the reality of it breaking until proven otherwise, you know. So that's where my head's at on the high time frame. Let's go back to the more local stuff. Let's go down to like the hourly. I'm going to put these levels back on. Where is it? Oh, wrong chart altogether. Let's go back to this one and then turn the levels on. Price levels. Okay. So all my incremental levels, I didn't have any set below 70. So this is all new. These $1,000 increment measurements that I have. But anyway, I don't need them, so I'll just turn them on. So if we go down to the hour chart, do we have a channel? Yes, we do. There is a channel idea happening. What I mean by that is the parallel. So if this line exists here because of that high and this high, scribes a line forward, then it has to have a parallel, right? So let's duplicate this. And it is helpful to track parallels. So parallel, taking this pivot low here, let's just lock that in. I'm gonna make this line gray now because it's been broken. Maybe I'll dash it as well. Just because it's not a primary line anymore. Okay, so we have parallelity down here. So if this continues to fall, you might get a reaction off the parallel. And that parallel, oof, you know what? This could end up being more something like that. It just depends. Let's duplicate that again. lock that there. And then also use this as an idea, because there's a couple of hits there too. This one has 4 hits, whereas the other one just has 2. So if we do the 4 hit, I'm going to make that extra dark gray because it's not my first idea. It's not my prime idea of what I think is going to happen, but at least it's there to keep an eye on, like which one gets validated, like which parallel, if it's going to be a parallel. Yeah, there's no like sign of strength yet in the market. Just waiting for it to keep playing out. What's up, MSJ? Sing. Hello. What else could we check? Maybe the oscillators. You can see I didn't pay for TradingView recently. It's just the free version. So we've got. Let's get rid of the stochastic and let's get the standard RSI up. Get rid of the moving average. All right, and let's go to like the weekly chart. Hide all the drawings. And check it out. The MACD is lower. The MACD is already lower than it ever was in the last bear market, as far as the weekly chart is concerned. So that's got to count for something. So if you see what I mean by lower, is if you take where it currently is, it never even got that low last bear market, the MACD. So this is some serious downside that we're getting. Probably because of the volumes and the levels that have pushed it down so severely, you know, falling from such a height. The MACD's kind of reflecting that. And then the RSI, like the classic, that's gone. Let's go full screen. So there's last bear market's RSI level, like right there. We're basically matching it. So that's kind of a big deal. You are about as oversold, at least from an RSI perspective, as the lowest point the RSI got in the last bear market. Now that did not coincide with the lowest price though. So see what I mean by that? Basically is pointing out this drop, but as we know, the lowest price came in all the way over here, which was weeks later, many weeks later. So if you duplicate that as an idea, let me turn off these levels again. I may as well go hiding all these too. So check this out. I'm going to fractal copy. Let's get rid of the MACD. We don't need that right now. We're just going to focus on the price and the RSI. So we had a bunch of bullish divergence on the weekly RSI due to lower lows on price and higher lows on the RSI, which was basically like this. So check it out. If I expand this just to stress the the point. I'll make that a different color. Huge bullish divergence. If that was to happen again, what would that look like timing wise? Let's just, for argument's sake, this is the best we got, so let's just use a ghost pattern, bars pattern. And so keeping the timing the same, if we move that low to the current low there, that means a low could come in like late July, if it's to be of similar timing. But as we know, this bear market that we're currently in is hitting stages a lot faster than this bear market did. It took longer for this bear market to achieve certain checkpoints along the way. This one's doing it faster. This one has done a lot of the checkpoints like it, if that makes sense. Now, what other things can we compare? I'll get rid of this idea. So yeah, if we get like some kind of bullish divergence on the weekly chart, that might show up like something like that, where the lows get higher on the RSI, and that, you know, that takes many weeks to play out sometimes. Where yeah, you get the gist. But I want to check the fib levels, so I'm going to close. Let's close that RSI off, and let's work off the fibs. Fibonacci retracement. Let's just do a linear retracement. Just go clean fibs. So from a linear perspective, we basically went down, let's just say the 786 level. Yes, it went through the 786 a little bit, maybe 80% corrected. But 786 in relation to the entire, you know, bear market low to bull market high of that cycle, the thing retraced about 80%. Let's say 786 level. So if we hit the same, if we do the same behavior this time, it means we have to pick out the all-time high of this cycle and the bear market low of last bear market, which is like that. So if we hit a 786 just like last time, we're going to hit around 40k, 39,000, you know, which means there's a lot more price falling to do before we get down there. The reversal, timing wise, remember, was like late September, early October, if you go by the cycle theory. So yeah, could be some more downside to come. I think we'll be very lucky to get these prices if we get that down there. Some people are calling for 30,000. That's a very old structure. A lot of price activity off that level. So 30,000 certainly on the cards as well. Oh, there's another one here too, another low that came in just here. But yeah, 30,000 would be excellent. We'll be very lucky if we get 30k. So let me just delete some of that. So yeah, there's a couple of ideas. There's the measured move idea that I was talking about earlier in the stream, which was 52. Like to hear. And then there's this 786 idea, which is 39. And then there's the whole timing thing. So expect it to happen somewhere late September, early October. So down in this box here. Down in that bubble. We haven't, like, this is like the only form of relief that we've had, this bear flag. So there's been no other reliefs since the high that we've seen yet. And then look at the last bear market. How many reliefs did we get? We got that one. Then it took some time, but we got that one there. There's a little baby one here, and then a little bit of an incline there. But really, there was only 4 significant bounces. Maybe this one here as well. But you could class that as being this one, where it came up after that low. Bit of an automatic rally off the back of a drop. And then this was the big bear flag, like that one. And then what's yet to come is like a bit of a floor is found. And then we play around with the floor for a bit. That could be this 60k level, potentially. Like where, you know, we get in touch with it. It rallies to like 70 and then 65 and then 62 and then losing 62. Coming down, and then yeah, who knows? Who really knows? But we've seen, by the way, in at least the prior 2 bear markets, we've seen this like shelf behavior where price finds a shelf like this and then falls through it, like as a finale. Like, I'm going to say it's more like something like that. But yeah, see, if I go to the daily chart, go back to it, I'll delete the FEB. See how price fell off that shelf. And that is a number of days, that's months, using that red line as support, and then, you know, a final flush down to panic everybody. It happened back in 2018 as well. In a much more dramatic way, actually. You can see it there, the shelf. So it, yeah, tries to establish a low, fools everyone that, you know, into thinking that was the lowest it would go, just by the amount of time that it respected it. And then you get one final flush down. So could that little shelf, could we be at that level already? Like that red shelf? You know, could that be it there? Could we be starting to establish something like that? Yeah, it's quite possible. Something like that, and then a capitulation to take us down to, like, you know, let's say 52, for example, and then we start to recover. And then the new bull market begins, you know, and we go through it all over again. It's another little idea. Whoops. Alright, well, that pretty much covers most of the ideas that I had to talk about today. I just wanted to sort of see, or at least document the outcome of this consolidation move that has happened. Not many people are around in the discords, so sentiment is down. People are bored. That's nothing new. Happens a lot in crypto. Alright. Thanks for tuning in. I think we got a maximum, what do we get? A peak viewership of 9 people. Remember to smash up the like button, guys, and subscribe if you haven't already. And I'll catch you in the next stream. Have a good night, have a good day.